Hi everybody, today I'm going to provide you an update of my stocks and unit trust portfolio as of 31st of January. And it's just nice 1 month old. Just give you an update on the performance for the month of January 2022. I've also bought 3 US stocks, okay, where I will share with you on these 3 US stocks and why I buy them. Before I talk about the portfolio, let me talk about the 3 US stocks that I have bought for the month of January. The first stocks I have bought is JPMorgan, which is the largest bank in the world based on market capitalizations. And JPMorgan is classified under called a universal bank, where they provide both commercial banking and investment banking services. In simple terms, like commercial banking means that they provide service to consumers and corporate, while investment banking are providing service to the institutional and the high net worth. As they are a universal bank, means that they have a diversified business, and this will make them more resilient to the change in market conditions. Okay, and JPMorgan is the first bank to have branches present in all the 48 US states, and it also have established a Chase retail presence in the UK, and it also have went into China for expansion. On top of that, it also have presence in several other countries internationally. And when you look at banks, actually I look at two sides of income, which is the NII and also the NIR. NII is a net interest income, okay, where NIR is a non-interest revenue. You can see that these two, because of the scale of the company itself, it's able to compensate for one another, where you can see that NII have dropped from 19 to 21, but the NIR actually in fact have went up. So they are sort of compensating one another on that. And one thing about JPMorgan from their earnings call, they mentioned that there is some headwind going forward. However, their 70% ROTCE is still remain their base in the medium term. And this 70% is a pretty respectable returns when you compare to their competitor in the US market. And thus, I prefer JPMorgan as one of the banks for my US portfolio. And I get it in when there is a market corrections in the late January this year. A lot of people have mentioned that interest rate will increase, which is good for the bank. However, do think that there's other costs and expenses may have go up for the bank also. Thus, interest rate increase doesn't mean it's really a straightforward thing that you'll definitely benefit the banks as a whole. As NII is just one form of business the bank derive income from. The second stock, US stock that I purchased is called Costco, which is the warehouse club operator, and it is also considered as a consumer defensive stocks. A competitor is like Walmart or Target. And let's look at Costco today. It is currently the third largest global retailer, and it is the 12th largest in the Fortune 500. They have a market cap of 238 billion, and Costco have 828 warehouses worldwide. Of course, US will take the major part, followed by the rest of the world. One strength about Costco is their membership, where they have 62.5 million member household and 113 million cardholder. And when we look at the renewal, the worldwide renewal rate is 89%. This actually creates a membership income for Costco, which actually is $4 billion in membership fees. And this creates a stable revenue for Costco. And when you pay the membership fee, most likely you will go on the shop, you'll go to Costco to shop at the same time also. You'll not go to like competitor like Walmart, Target to shop since you are a Costco member. This creates loyalty base of consumer for Costco. And based on their renewal rate, you can see that their loyalty is very high, where for the US membership renewal, it's actually more than 90%. And e-commerce is also another thing that Costco is also going in, and they also have the e-commerce, and also they have the online portal, not only on US, they also have the e-commerce in the rest of the world where they have a presence there. And Costco have been paying dividend since 2004, and the dividend growth rate is 13% per year. Although for me, when I invest in US stock, I'm not looking for the dividends, and also the dividend yield is pretty low compared to Singapore stock after we less off the 30% withholding tax. However, when a company able to generate a dividend growth rate of 13% in dividends, this will indirectly mean that the share price will also be moving up equally fast to catch up with the dividend growth rate. And you can see that the share price of Costco has outperformed S&P 500 since December 1985, where the S&P 500 only achieved a 9.3% return, but Costco share price is 17.3%. It is almost double S&P 500 returns. Furthermore, it is a defensive stock. Thus, I take the opportunity to buy Costco when there is a market downturn in end January, and I pick up Costco when it falls due to the overall market sentiment that come down. The third US stocks that I have purchased is Microsoft. It is a big tech company, and I think I don't need to share too much about Microsoft, as I think most of you will know what Microsoft is. And in mid-January, they have announced their Q2 earnings, where you can see that they are able to make a revenue of 51 billion. It is a gigantic company, and yet they still can grow at 20%, which is a very respectable result. And you look at the gross margin, it is 67%, and their operating income is 43%. This is a very profitable company, and their EPS have beat the analyst target. And Microsoft is still growing very strongly, and they're able to forecast a very strong earning growth going forward. I think that it is the stock that I plan to keep for a long time. However, the share price have been growing very strongly, and there's no opportunity for me to buy until lately the market have corrected and Microsoft managed to dip below $300, and I take this opportunity to buy Microsoft. So this is the stock portfolio as of the 31st of January. So you can see that I have 2 REITs counter currently and 3 US stocks, and the REITs counter are not performing currently, while the 3 US stocks have making quite a good returns in such a short time frame, and thus the total portfolio is positive. And I also have already top up $2,000 at the end of the month, okay, for me to look for the next purchase. Going forward, I will speed up my top up. Instead of doing a 2,000 per month top up, I will do a 2,000 top up every fortnight. That means at mid-month, I'll top up 2,000. At end of the month, I'll top up 2,000. Ultimate goal is to build a portfolio of 10 Singapore counters and 10 US counters. And I'll cap the cost per counter as 5,000. Means that I'll not buy more than $5,000 per counter. I'll make the adjustment after the portfolio have reached 50,000. And let's look at the unit trust portfolio. We have down 8% as of the 31st of January. And the one that did the down is the Aberdeen Standard Global Tech, which is down about 13.7%, followed by the UOB United Global Quality Group. And both these are very tech-heavy unit trusts. When the US market have corrected, and we know that there is a big sell down on the tech-related stocks, and thus these 2 unit trusts, which are more tech-focused, definitely they will suffer the biggest drop. However, do take note, as I mentioned before, that this unit trust portfolio is a very aggressive portfolio where they have a maximum drawdown track record of more than 15%, and the volatility is also more than 15%. And thus, 8% dip during this market, US market sell down, it is expected. But I'm looking at longer term, and I will be doing my monthly investment of 2,000 per month to the portfolio on a regular basis, and we shall see how does this portfolio grow. That's all I have to share with you today on this portfolio update. And if you feel that this video has benefited you, do remember to like and share this video, and also do leave your comment below to let me know what you think. Lastly, do remember to subscribe and press the notification button so that you'll be notified on my next video. I shall see you in my next video. Bye-bye.